We are recording the session. Okay, the recording is on. Okay, so basically I was telling you there are three type of indices which we can trade. Tradable indices are, Nifty, Bank Nifty, Nifty Financial Services. Basically people have much interest in trading Bank Nifty. Everybody is crazy about Bank Nifty, Bank Nifty, Bank Nifty. Even there are some people who give services in Bank Nifty, paid services in Bank Nifty, and people, they are crazy about Bank Nifty. Even to that matter, Nifty, there are some very good learned people who trade in both the indices. But as far as my experience or whatever I have seen, it is very difficult to trade in index. Okay, so there are some key points which I would like to share. Okay, so these points may help you in your trading system. Okay, if you are a trader who likes to trade in index or maybe particularly Nifty or Bank Nifty or whichever is your favorite. So basically there are two types of people. It may be index or it may be stock or anything, a buyer and a seller. Okay, and this discussion is understanding, means I have an assumption that you know about option buying and option selling. So considering that, I'm discussing these things, right? So there are two types of people: a buyer who buys an option or a particular strike in the index, a seller who sells a particular strike or particular option which has some premium. Okay, so there are two types of people. So buyer, basically buyer is a retailer who has less capital. Okay, who is buying the option. And seller, who is seller? Seller is an institution, so they have no huge amount of capital. Now we will talk in terms of what are the advantages of both sides. Let's say there is a strike price. Okay, consider Bank Nifty only. Consider Bank Nifty only. Let's say 37,000 call. I don't know exactly. 37,000 call. Let's say it is trading around 150. Just consider an example. 37,000 CE of next week expiry is trading around 150 rupees. Right. So this is one case. Now, what the buyer is going to uh, see in this, what the seller, what are the advantages of both? Let's say a buyer buys this option. There are two things possible. The 150 premium, okay, it may go to zero. This is first case. 150 premium may go to zero. Means what he is going to lose? There is a lot size of Bank Nifty which is 25 quantity that we have to buy, right? So the investment will be 25 into 150, which comes out to be, if we calculate how much it comes, let me just check. It comes around 3,750. Okay, so this is what he is going to lose if the option goes to zero, right? This is what he is going to lose. This will go to zero. Okay, this is the first case. What is the second case? Second possibility, if he is right, the 150 premium, okay, it can go to 200, right? 300, maybe 400, and there is no limit. There is no limit for his gain if his direction is perfect. Let's say Bank Nifty in the coming week, if it goes to 38,000, 39,000, then this person, buyer, will have unlimited gain. There is no limit for the gain. Means he can gain infinity also. So there is lot of possibility that a buyer can have infinite gain. Okay. So one thing is that buyer knows how much he is losing. That is 3,750 rupees if the premium goes to zero. Okay, this is what the buyer knows. And what is his gain? His gain is unlimited. Now, same thing from the point of view of a seller. From the point of view of seller, what the seller is gaining, gain his, if it goes to zero, he will gain 3,750 rupees, right? Seller gain is how much? Whatever he is selling the option, 3,750. Now, to the reverse, if the bank nifty goes against the seller, then what he will be losing? He will be losing unlimited money. He losing his no, his loss will be unlimited. Okay, his gain is limited, loss is unlimited. Okay, from this point of view, if you think, no, then it seems that buyer is very intelligent and seller is a fool. Buyer is intelligent, seller is a fool. Right? But is it so? Is it so? It is not so. See, buyer is not making profit every time. Buyer is not making profit every time. We know that the thing is buyer wins maybe like 5 to 10% times. 5 to 10% times buyer wins this game of buying or selling. Let's say we'll make it say 10 to 20%, just to make it little bit bigger. But we know that always the game is in the hand of seller. The game is in the hands of option seller, because institution is quite big. Okay, why it is so? Because see, if a seller is losing infinite, in spite of that he is selling, seller का लॉस अनलिमिटेड है फिर भी वो सेल कर रहा है. Okay, and institution has so many resources. Institution has so many resources. What are the resources? What are the resources that institution has? First of all, institution knows if you sell an option at 150, it goes to zero. तो उनका गेन तो लिमिटेड है. गेन इज लिमिटेड, विच इज say 3,750. Okay, for to have this much of gain, what is the capital they need? What is the capital that they need? The capital that they need to sell an option is maybe 1 lakh, depends on broker to broker. Right? Just for one lot, we are talking about one lot. So for the capital of 1 lakh, if you are gaining 3,750 rupees, if you are gaining 3,750 rupees, just imagine what is the return. It is hardly less than 5%. But you think like just in 4 to 5 days, a return of 5% is very good. If you understand properly the economics point, see, a person who knows it better, he will appreciate for 1 lakh rupees, just 4 to 5 days, a gain of 5% is very good. That he will appreciate, right? Okay, see, a buyer just needs 3,750 to buy the option, but a seller needs a capital, huge capital. So seller has comparatively some disadvantages. But what are the things that are in favor of option seller? What are the things that are favoring of option seller? The things that we don't have. See, an institution has information. Okay, which may be confidential. Institution has information which is confidential. Right? Confidential information is what? Very important in case of trading. Then institution has high-end chart systems. Okay, high-end charts. Okay, and maybe they have very experienced people who are trading for them. They have programmed algos. Okay, so institution is always one step higher or one step ahead of a retailer, because institution is just selling a premium which is worth 150, means they know what they are doing. Okay, it is like institution just gaining 3,750 per lot by the investment of 1 lakh. So think in this perspective. जब कोई इतना बड़ा रिस्क लेके सेल कर रहा है, he knows that he has unlimited loss, means he knows something which a retail doesn't know. That is, always we see that institutions winning ratio is more than 80%, maybe like more than 90% only. Rarely we see that institutions are losing. Rarely we see that institutions are losing. Always institutions are winning it, because they have so much of information. They have very advanced traders with them, advanced charts facilities available. Okay, so always a group of people who are very good, they are trading in index, they are selling an option. So always we should know what the institutions are doing. Okay, so if we are intelligent enough, then we should not trade in a day when the institutions are active. We should not trade on a particular day when the institutions are active, right? It is very important point. Okay, usually institution wants premium decay. Institutions want premium decay. If I say that seller means institution, what they want? They want, these are very important things, premium decay. Institutions want premium decay. Understand this one. Okay, but what the other side, buyer, what a buyer wants? Buyer wants the premium to increase. Buyer wants the premium to increase. Institution wants the premium to decay. But what are the chances of the institution winning? Chances of institution winning is more than 90%. Chances of institution winning is more than 90%. But if always institution is continuously winning the game or winning this situation, then who will buy the option? Nobody will buy the option. So that is why if you see for a period of 1 month, if you consider 1 month time frame, 1 month time frame, usually it is purposely, means I have observed this, it is purposely done by the institutions. They are active for say 15 to 16 sessions. 15 to 16 sessions they are active, means they will make sure that the premium will decay. Maximum strike options will go to zero. So 15 to 16 sessions, it is known as DL days. DL days means how the option premium goes to very minimum when we have option going up, coming down, means the index going up, coming down, index going up, coming down. So that means in such situations, premium will decay very faster. And for the seller, they have an advantage of time decay, which is theta. They have this advantage, time decay, which is theta. As we approach to expiry days, as we approach to the expiry day, what happens is premium will shrink. Premium will shrink. This is the advantage that the option seller has. So in a month, let's say there are 20 trading sessions. 15 to 16 trading sessions are dominated by option seller. Option seller makes sure that the premium definitely goes to zero. So if you consider n number of strikes, they will make sure that the premium will go to zero. Okay, that is why we should not trade in index each and every day. We should not trade in index each and every day. If at all you want to trade, never trade in index daily. Okay, you just think, whenever I have traded in index continuously for a week or 2 weeks, have you made profit? Definitely no. Because we usually tend to buy options. So buying option continuously on daily basis, making profit is impossible. Because trust me, we are playing against a player who has very high end systems, very crucial information, and he is very experienced, because he is taking unlimited risk. He is playing a game where he has unlimited risk. So definitely, understanding all those things, if he is trading, means definitely he is a superior player. We cannot fight against him. So whenever the person or the institution or seller is active, definitely we should not trade in index. We should not trade in index. It is better to avoid trading when we have dual days. Dual days means these days the premium decay will be very fast. Premium decay will be very fast. Now, when we should trade, buyer should trade whenever 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 there are no dual days, or whenever seller is not active. These are the days we should trade. So how many sessions we have? Means in a month we have 20 trading sessions. So let's say 5 sessions. 5 sessions are in favor of buyer, because if all the sessions are dominated by, say, option seller, then who will buy the option? Who will buy the option? Nobody will buy the option. Institution wants retailer to buy option. That is why they give chance. They give chance in a month, 4 to 5 trading sessions. They will give it that, let's say you go and enjoy. So those are the trading sessions where we can make money. So these are some important things. So let's say if you see that an index is trading in the range, means definitely understand that market is dominated by seller. Right? Let's say index is not in the range and it is making higher highs on a particular day, or let's say index is making lower lows on a particular day. That is the day when you can trade. If an index is making higher high, that is a day where you can buy option, means call CE, and you can make money. On a particular day index is making lower lows, that is the day when you can buy put option and you can make money. It is not every day. Okay, usually you see that index is range bound most of the times. Especially you see bank nifty, it is sometimes you feel that why it is not moving. It is basically because of this reason. At least on the day of expiry, you see that you are expecting bank nifty will move 200 points, 300 points, but definitely bank nifty will not move 200, 300 points in one direction. What it does is it goes up 100 points, it comes down 100 points. By doing such volatile moves, it will eat out all the premium. And trust me, institution knows better the range of expiry. If expiry happens in that range, all the strikes or maximum premiums will decay and they will have maximum gain. Right? So that is why, being option buyer or being retailer, we should trade in the days, or we should not trade in dual days, in these days when sellers are active. Very important thing, very simple thing. Whenever you see range bound market, don't trade, leave it, and just just observe the market. Okay, by trading every day, you will make losses. Okay, you know it better. If you are a trader, you know it better. I need not tell to you people, because you have good experience. Many people have good experience in index trading and they know the fact. Okay, now the people, means the beginners, they don't know these facts. So they feel that, okay, I have 10,000 capital, if I lose, I will lose 10,000. That is wrong thinking. 10,000 is also important. Okay, instead of thinking randomly and taking random trades, you need to be intelligent. You need to think. You need to trade wisely. Simply don't trade in index every day. Whenever you are trading, make sure index is not in the range bound, or it is not stuck in the range. Okay, so let's say if the index gives 300 to 400 points moves in a day, bank nifty, definitely that is the day when you should trade. And how to identify that? For that, we need to learn the analysis part. Okay, And the the thing what I'm telling is this is applicable to no only index. I'm not telling you these things will happen in stocks. This thing whatever I observed, no, it is applicable to index. Okay, so this is my observation, this is what I have observed, and most of the times it comes out to be true because I'll be noting down the data, I'll be collecting the data as per the information whatever I have collected. I have seen maximum times expiry is in the range. The range will benefit the option seller who will win the game, will win the game and will make maximum profit. Okay, so always whenever you want to buy an option, no, usually avoid expiry days. Usually avoid expiry days. But many people, not many people, almost every retailer likes to trade on the day of expiry. He thinks I will invest 5 to 10,000, I will make 1 lakh, 2 lakh money. Virtually everybody thinks today I would have made 1 lakh money. Today I would have made 1 lakh money. Recently it happened. Bank Nifty suddenly fall on the day of expiry, and no, all put options of just 15 to 20 rupee they went 100, 200. Everybody thinks that if I had bought option of 15 rupee, it would have gone to 100, 200, and I would have made, just by investing 5 to 10,000, I would have made 1 lakh rupee. This happens virtually. Anybody has made such money? Trust me, no one makes such money. It happens only virtually. It happens only virtually because we do not have that much of patience or that much of what you can say. Um and the direction we don't know exactly, and especially index is very difficult. If 15 rupees option goes to 20, 25 rupees, we score off maximum, we can earn that much. Okay, and that is good thing also, whatever we are earning, whatever we are gaining, it is good thing to book profit, if not full, partial profit. Okay, and always an index trader needs to be very active because it is volatile, it is very volatile. Okay, so these are the few points which we should know. Okay, summary is, don't trade in the index every day. Okay, understand the index. If the index is giving you one sided move, then you can trade in the index, but that one sided move you should identify, you should catch it. That is possible by technical analysis, that you should learn. And trust me, by learning things, you can improve, but it will not happen in just 1 or 2 days. It takes years of practice. Then only it is possible. So if I summarize, the discussion is very simple. Whenever we have dual days, when the market is going up, suddenly coming down, don't trade in such days. Don't trade in such days. Trade on the days whenever index is making higher highs or lower lows. On the days when the index is making higher highs, you can buy call option. On the days when the index is making lower lows, you can buy put option. Okay, and trust me, whatever I'm telling, usually in a month we have 20 sessions. Out of 20 sessions, it is like 15 to 16 sessions are dominated by option seller, who is an institutional guy, or who are the team of institutions. So they will dominate. These days are known as dual days. These days are known as dual days. They take the favor of that time decay theta. Okay, and buyer is given only no sessions where he can make money, that is just 4 to 5 trading sessions. If you understand this one perfectly, then I think you have no edge over other people who doesn't know this. This is very crucial information which many people they just ignore. If you are a trader, no, if you are a regular trader, definitely you know this thing. Every day you cannot make money by trading in index. You trade today, let's say you have traded today and today was a good day for option buyer, then you have made money. Tomorrow, it will not be again option buyer day. So we need to understand this fact. We need to understand this fact and trade, right? Because institution knows by losing means if he loses, if he goes wrong, his loss is unlimited. His loss is unlimited. But a option buyer knows how much he is losing. How much he is losing. That is the difference. But still, institutions are selling option means they know what they are doing. They know what they are doing because they have very crucial information, very high-end information which institution doesn't have. Okay, so that is why it is recommended to never go against institutions or never trade on the days when we have dual trading. Dual days. Dual days means option will go up very fast, option will come down very fast. So such days you should avoid. And one more thing, never option. If you have bought an option, if you feel that that option will again rise, don't average option. If at all you buy option, some points what I am telling, never average the same option strike. Never do it. Never ever do it. Okay. Then other than that, you should know about which strike to buy, where you get maximum benefit. So all these things. Yes, I think that's all from my side. If at all you have anything to ask, you can ask. I'll try to answer. This is just general discussion. As I said, there are some things which I wanted to discuss. So these are the some general points what I wanted to discuss. Yes, if at all you have anything to ask, you can ask. Any query, if I know, definitely I will answer. What about stock specific action? Is there also DL days? Okay. Usually in stocks, it is not so. It is not so because no. Usually we have index funds. Index funds means they trade in index. They are option sellers. Stock specific, I have not seen. I exactly you can say I don't know, but definitely in index we have this uh, problem of no dual days where you should avoid trading. Stock, I think there is no such thing. If as far as my knowledge is concerned, any other query, anything, any general query also, if I know, I'll answer. You can ask. You can comment in the chat box. I'll read and answer. Any query, if it is related to this session or not related to this session. So I will just stop the recording.